Monetary policy, economic growth, and capital flows are the three pillars that determine currency rates in Forex. Questions remain on all of them. Will the Federal Reserve aggressively cut rates? Will the eurozone economy outperform the US? Where will hedging flows drive the US dollar? The answers to these questions will decide the fate of eurozone. A strong economy means a strong currency. In the second quarter, US GDP looked better than its European counterparts. However, the main reason was the smoothing of US import flows after the spike seen in January-March. Dynamics of leading G7 economies, aggressive European Central Bank monetary expansion, Germany's fiscal stimulus, and a decline in tariff-related uncertainty boosted business activity in the currency bloc to a 50-month high. Despite high import duties, purchasing managers remain optimistic. The manufacturing PMI entered expansion territory for the first time in 3 years. There are many arguments suggesting that in 2026 the European economy will surpass that of the US, partly thanks to the potential end of the Russia-Ukraine conflict. Adding the nearing completion of the ECB's monetary expansion cycle and the Fed's readiness to cut rates, eurozone bears appear doomed. Dynamics of European business activity, however, capital flows raise even more questions than economic growth and monetary policy. According to Credit Agricole Research, in June non-residents bought U.S. equities worth $163 billion on a net basis. Of this, the official sector invested $46 billion, while the rest remained with the private sector. The overall figure is a record high, yet the USD index lost about 2 over the first month of summer. A paradox. Credit Agricole believes the issue lies in active FX risk hedging by foreign investors. While buying US assets, they simultaneously sold the US dollar. The firm suggests the reason was a broadly negative backdrop for the greenback. However, if eurozone continues consolidating, demand for hedging will decrease. As a result, the dollar may strengthen against the expectations of most Forex traders. In the short term, eurozone dynamics will depend on Jerome Powell's remarks at Jackson Hole. The Fed chair is unlikely to dissuade markets from expecting a September cut in the federal funds rate. However, he will not preemptively announce a second step toward monetary expansion in 2025. Such a speech could support the US dollar. Technically, the daily US chart shows ongoing consolidation and a battle for fair value at 1.165. A breakout below the 1.162-1.170 trading range may trigger selling. A firm close above 1.165 followed by a move toward 1.170 resistance would be a basis for buying. The material has been provided by Robot FX Robots.